Ekovest has confirmed that it is currently in discussions with relevant parties to explore a potential takeover of the cross-border rapid transit system or RTS Link project. The construction group said this in a burst filing in response to a report published by the Edge Weekly. Ekovest said all negotiations are still ongoing and announcements will be made once terms and conditions are finalised. RTS Link is a railway shuttle line of about 4 kilometres between Bukit Jagar in Johor Bahru and Woodlands in Singapore, capable of ferrying 10,000 passengers per hour per direction. It is slated to be completed by the end of 2026. In an article published over the weekend, the Edge Weekly said businessman Tan Sri Lim Kang Hu is understood to be looking to take over Adil Permata, the company given the mandate to build the 3.7 billion ringgit rail link. Notably, Lim has a 30.8% stake in Ekovest, which has a strategic collaboration with China Railway Dongfang Group, a subsidiary of China Railway Group, for infrastructure projects. At the close, shares in Ekovest rose 2.44% to 42 sen, giving it a market capitalization of 1.13 billion ringgit. Tenaga Nasional or TNB says first quarter FY22 net profit slipped 6.84% to 893.1 million ringgit due to higher tax expenses. According to the utility giant, this was because of an increase in deferred tax expense of 191.8 million ringgit and a reduction in current tax expense of 34.8 million ringgit, which was due to a lower taxable income despite an additional tax on the prosperity tax amounting to 113.5 million ringgit. Revenue grew 36.42% to 15.66 billion ringgit on the back of the under-recovery position of imbalance cost pass-through of 3.5 billion ringgit against the over-recovery position of 327.3 million ringgit in the previous corresponding period. TNB said its resilient first quarter performance was underpinned by electricity demand growth of 4%, consistent with the improvement of Malaysia's gross domestic product of 5%. It expects a reasonable performance for the year 2022. TNB's share price finished unchanged at 9 ringgit 25, bringing a market capitalization of 52.97 billion ringgit. Public Bank saw its first quarter FY22 earnings fall by 8.59% to 1.4 billion ringgit due to the recognition of the prosperity tax. Quarterly revenue dropped by 2.84% to 4.89 billion ringgit. The group did not declare any dividends for the quarter. In the first quarter of FY22, net interest income rose by 30.8 million ringgit or 1.5%, whereas other income increased by 42.6 million ringgit or 60.8%, which was mainly due to higher foreign exchange income. Meanwhile, the group's Common Equity Tier 1 capital ratio, Tier 1 capital ratio and total capital ratio stood at healthy levels of 14.3%, 14.4% and 17.4% respectively. Its liquidity coverage ratio remained healthy at 126.2%. Commenting on the group's financial performance, Public Bank founder and chairman Tan Sri Dr. Teh Hong Piao said the operating environment still remains highly challenging. However, he said the group's financing growth remains well supported by its healthy funding structure and that it remains in good stead to capitalise on growth opportunities in the post-pandemic economy going forward. Shares in Public Bank settled 0.65% lower at 4 ringgit 59 today, giving it a market capitalisation of 89.09 billion ringgit. RHB Bank's first quarter FY22 earnings fell 7.69% to 600.27 million ringgit, no thanks to higher taxes and lower net income. Stripping out the taxes, the group reported a pre-tax profit of 890.6 million ringgit, which is 3.1% higher year-on-year. According to RHB, the improvement was mainly due to higher net funding income, lower modification loss, lower operating expenses and lower allowances for credit losses, offset by lower non-fund-based income. During the quarter, the lender saw its tax and zakat expenses jump by some 36% year-on-year to 289.3 million ringgit. Companies with a chargeable income above 100 million ringgit for the year of assessment 2022 are taxed a one-off prosperity tax rate of 33% instead of the blanket 24% previously. Meanwhile, net income slipped 1.01% to 1.9 billion ringgit due to lower Islamic banking income on higher expenses and as net interest margin slipped to 2.11%. On prospects, RHB sees further expansion in loans growth this year as economic growth gathers steam in FY22. The lender says it is embarking on its new corporate strategy for 2022 to 2024 called Together We Progress 24, under which it is eyeing a return on equity of 11.5% from 9.6% currently and a cost-to-income ratio of 44.5% from 45.2% among others. Shares of RHB settled 0.67% lower at 5 ringgit 91 today, giving it a market capitalisation of 24.48 billion ringgit. Lembaga Tabung Haji continued to record historic highs, with total deposits reaching 88 billion ringgit as of this month, state news agency Bernama reports. That's up by some 16% from 75.92 billion ringgit in December 2020. Under the Hijrah 24 Strategic Transformation Plan, Tabung Haji is aiming for total deposits of 100 billion ringgit. According to the report, Acting Executive Director of Operations Muhammad Amin Abdul Wahab said the increase is quite significant as monthly net deposits had surpassed 1 billion ringgit. He said Tabung Haji recorded a net deposit of 1.1 billion ringgit in April, among the highest monthly net deposits to date, reflecting the confidence of Muslims in Malaysia towards Tabung Haji. For 2021, Tabung Haji announced a profit distribution after zakat of 3.1%, benefiting more than 8.4 million depositors. Total distribution amounted to 2.46 billion ringgit, compared with 2.24 billion ringgit distributed in 2020, an increase of 219 million ringgit.